The market's been on fire, but don't let that fool you. It's a trap. The S&P 500 just wrapped up its third consecutive year of double-digit gains. It sounds amazing, right? But here's the truth that nobody is talking about. Most investors lose their retirement savings not when the crash hits, but in the months leading up to it. And right now, the warning signs are flashing. The valuation ratios, they're at historic highs, levels we've only seen twice in history, 1929 and 2000. Both times investors saw their wealth vanish almost overnight. So why are we acting like this time is different? This is where the danger lies. Stick with me, because what I'm about to show you could protect your wealth and even turn this rally into an opportunity while everyone else panics. Let's break this down. Right now, the market looks invincible, like it's on a non-stop upward trajectory. The problem? That's exactly what investors thought in 1929 and 2000, just before the bottom fell out. So what's happening right now? The S&P 500 is surging, but there's a catch. When the market's at its highest, that's when investors feel safest. The problem is, every major market top in the last 100 years, every single one, followed the same pattern. Investors felt untouchable, convinced that this time it's different. But the crash was coming, and it's happening again. But here's the question. Are you going to be the one who gets out in time, or will you be the one holding the bag when everything falls apart? Here's the cold, hard truth. Every single time the market reached a top in the past century, the signs were always there. And right now, the most crucial signal is flashing: the CAPE ratio. It's a valuation indicator that has only hit the levels we're seeing now twice in history, 1929 and 2000. What happened after that? Both times the market lost over 75% of its value. Let that sink in. In fact, right before these crashes, investors were feeling exactly what we're feeling right now: invincible. The crazy part, even with all the evidence, investors ignored the warning signs. They kept buying and buying until they lost everything. The big question is, why are we ignoring the warning signs now? Now, let's talk about how this all escalates. We've seen this before. Back in 1929, the market was booming. Investors were living large, thinking it would never end. Then it all came crashing down. And in 2000, it was exactly the same story. This isn't just a coincidence. This is a pattern that repeats itself every time the market hits a peak. Right now, we're in what's called the acceleration phase. The market is moving faster than profits can keep up, and guess what happens next? The real trouble begins. In the past, this phase has led to devastating crashes. But this time, it's different, right? That's what everyone said last time and the time before that. But if we're honest, we know this could be the beginning of something huge. Are you prepared for the fall, or are you getting caught in the euphoria? Now, here's where it gets even more unsettling. The data is staring us in the face. The market isn't just overheated, it's irrational. Back in 1999, the market hit a peak that we're dangerously close to today, with the CAPE ratio at record levels. But here's the kicker. The smart money, the institutions, the insiders, they're already pulling out. Meanwhile, retail investors like you and me are diving in, thinking the good times will last forever. That's exactly what happened in 2012. People were riding high, watching stocks skyrocket, thinking they were making the right moves, but then, boom, the crash. And the worst part, it was entirely predictable. Notice what's missing? No one was talking about it back then, and no one's talking about it now. The question is, are you going to be one of the few who sees it coming, or are you going to get caught holding the bag when it all comes crashing down? Now, this is where things start to snowball. Watch closely. We're seeing a stack of bad signs. First, we've got the narrowing market. The big tech stocks are holding up the whole market, but the rest of the market, it's lagging behind. Then we've got insane investor behavior, people throwing their money into unprofitable tech stocks, meme stocks, even crypto, all the risky bets. And just like clockwork, the smart money is selling into this rally, but it doesn't stop there. Over the last few months, volatility has spiked. We're seeing panic selling, insider moves, and massive shifts in investor sentiment. So what happens if this continues? If the big players keep pulling out and retail investors keep piling in, you're looking at a recipe for disaster. This is the moment where fortunes get wiped out. The question is, are you going to recognize it before it's too late? Let's shift gears for a moment and talk about you. If this sounds familiar, it's because it's happening all around us. Everyday investors are riding this wave, feeling on top of the world as their portfolios climb. But when this crash comes, and it will, those same people are going to feel it the hardest. The reality is, most people can't afford to lose everything. Think about it. For years, you've been building your wealth, putting your savings into the market. Now imagine watching all that disappear overnight. What happens to your retirement, your plans, your security? And it's not just about money, it's about peace of mind, the stress, the uncertainty. If this resonates with you, drop a comment below. This isn't just about the market, it's about your life. Now let's move beyond the panic and look at what's driving all of this. It's not just random chance. This is part of a much bigger system. Here's the thing. Institutions and the big banks, they're not blind to these patterns. They've built systems to exploit them. The system is designed to make money for them, regardless of what happens to you. Think about it. Every time the market hits a peak, the insiders know exactly how to position themselves. They sell when everyone else is buying, and when the crash hits, they swoop in to buy up the wreckage at a discount. So how does this happen? Simple. Leverage, fear, and the spectacle of the market itself. The more the media hypes things up, the more naive money floods in. The more naive money that gets trapped, the better it is for the big players. And that's where the real manipulation happens. This isn't a random market fluctuation. It's a game and you're not in control. The system is rigged and most people don't even know it. Now let's look ahead. We're at a crossroads. Two paths are unfolding before us. One leads to a continued rally, driven by tax cuts, AI spending, and the potential for lower interest rates. The market could keep climbing, fueled by cheap money and optimism. But here's the other path, the inevitable correction. We can't ignore the signs. Valuations are stretched to historic levels, investor behavior is reckless, and market breadth is narrowing. If this momentum flips, the crash could come fast and hard, wiping out years of gains in a matter of months. So, where do we go from here? The truth is, nobody knows. But what's certain is that the next few months will determine which path we take. Will the rally keep going, or is the reckoning already beginning? The question isn't if it will happen, but when. And right now, things are moving in ways that should make you pay attention. So what's the big takeaway here? The market is a ticking time bomb, but you don't have to be caught in the blast. The signs are there. And if you can spot them, you can protect your wealth and even profit while others panic. We're at a critical point. The valuation ratios are extreme. The smart money is already positioning itself. And the average investor, they're still riding the wave, blissfully unaware of what's coming. But here's the thing. This is your opportunity to take control. The next moves are already taking shape, and you can be ahead of the curve if you know what to look for. Don't be the one who gets blindsided. Follow for more in-depth analysis and actionable insights. And remember, the market's always changing. If you're not prepared, you're already behind.